talk about moving averages, man. More specifically, we're going to talk about the SMAs, simple moving average. I typically use the exponential moving average when I'm day trading, but I don't trade long term too often. But I'm going to show you guys a quick way that you can go through your portfolio or your 401k or whatever other stocks that you're holding long term to see if you're just sitting on some lemons. All right, if you're getting sitting on some lemons, this is definitely going to tell you whether you're doing that. Forgive me if I move ahead too quickly, but normally if you trade, look at this particular location, this particular dial here on Thinkorswim, you'll see that you can change the time frames. Today we're going to be looking at the daily time frame, okay? Not the 5-minute, not going to look at that, not the 15-minute. We're going to look at the daily time frame, okay? So if you look here in the corner, you'll see that every time I switch over, it's going to switch over a day. The 15th, October 16th, 18th, October 19th, October 20th, 21st, 22nd, and so on. Now, what moving averages do, they actually measure trends, okay? This is considered an uptrend. Anytime you see a candlestick or a stock or a daily candlestick here above this line here, which is known as SMA, the simple moving average, that's considered an uptrend. I'm going to show you how we add that. You're going to click on this little indicator here, the edit studies situation there. You're going to go into, let's get rid of it so I can show you. You're going to go into there, and I would normally type in MOVE, and you notice what comes up is DMAs, the daily, and all that good stuff. Now, this is a good way also that you can find the exponential moving averages in this particular area. So we're going to back out of that, and we're going to just type in simple. Okay, now you see the simple moving average right here. Double click on that, or you can single click and add, whichever you prefer. And I typically go in here and choose my color. If I wanted to make it green, I'll make it green, or whatever color. I'm colorblind, so whatever color that is. But let's say if we wanted to make it this color, just to be, what's that, pink? Anyway, so when you see that the candlestick is above the moving average, that's telling you that, okay, well, I can ride it out and I can stay in this particular stock. Now, typically when people are trading long terms, they don't even look at it every day. They probably look at it once a month at the end of the month. So this is right now November 1st, okay? November 1st. And the reason why they do that is because stocks go up and down, up and down, up and down. They don't want to panic. So if you went here November 1st and went all the way over here and just said, oh shucks, the stock looks like it's going down, then you probably would have missed a little bit of upside potential, okay? A little bit of upside potential. But of course you don't want things to plummet on you, so you can keep that alert coming to your phone to see exactly where the stock closed that day. But if you're long term, just realize, kick back and enjoy the ride. If this thing is above the moving average, typically it's going to continue on the upside. So you can go through your whole portfolio and just plug these things in. We're going to plug in, let's say we're going to plug in Tesla, right? And just say, okay, well, this thing is kind of choppy, so I would have got out of Tesla, right here. Okay, Tesla would look like it's a dog stock right now at this particular point. Is that Tesla? That's not Tesla. That's something else. That's TZN. I don't even know how to pronounce that anyway. Tesla, right? Okay, so yeah, anyway, I got out. Let's see, Tesla was fantastic as it moved above the moving average at this particular point, which is October 7th. It rolled up, made a gap up at this particular point and hit a high at 1243. Then it started to gap down at this particular point, and then this was on November 9th. So if you didn't look at this stock at this particular time, it went from 1173 all the way down to, all the way down to 10, 20, 21. And let's see what it's gonna do. Let's see, the 19th. So it closed above the moving average on the 19th. So if you're still in the stock, riding it up, we can see exactly what it's gonna do. But let's back up a little bit. Actually, let's add another stock in here. Let's say GM, right? Say GM, okay, on the GM on the what date was that? On the 27th. It closed below the moving average, and if you were to keep an eye on that thing, you would have panicked and say, "Oh man, should I get out? Should I get out?" But you notice also when you got to the, if you're looking at it right here, you probably would have sold and got back in when it moved above the moving average right here on the 4th, on November 4th, and then just rode it out. Take small losses, take big gains, right? Always know you're out before you get in. So if you'd have got back in right here when the green candlestick closed 3/4 in above the moving average, you probably got in here on the 10th, or you would just rode it out when it bounced below. Let's see, this is you probably would have got out right here, but got back in at this particular point, not here, because you need 3/4 of this candlestick to close above the moving average to, in my opinion, to confirm that, okay, well, we got 3/4 of the candlestick closing above the moving average, similar to this. Let's get in and try to see exactly what we can do. All right, so that's the moving average there. It's basically like a trend indicator. This thing closes below the moving average. That's definitely a time where you want to consider getting out, taking your profits. Closes above the moving average here. Time to get in, ride it up, and see what's going to happen. Let's look at Apple. All right, let's look at Apple here. Let's go back to the beginning and see that Apple closed above the moving average for 1, 2, 3, 4, 5 days. Started going sideways, hit another upside here, then closed below. Not below, but 3/4 of the candlestick is below, which meant that, hey, keep an eye on it, see what's going on. This was a pretty weak candlestick here as far as volatility, and closed below here. Probably would have got out at this particular point and gotten back in here. All right, so just realize that you need more of the candlestick to close above the moving average than below if you're playing. You plan on buying it, the stock. I do the same thing with options. I look at, okay, well, this candlestick closed here. Okay, well, we may want to get in because we may have some upside on this particular situation. All right, this is a strong situation here where the candlestick closed the above. Probably wouldn't have gotten in here. Okay. You probably would have gotten in at this particular point right here, okay, and just rode it out for a bunch of days. Yeah, let's see, you got it here. You rode it out all the way until this is June 11th, all the way up to possibly July 19th. All right. So, like I said, this is a fun thing to do. Go through your entire portfolio and look at if your stock is above this line. And also, I just want to let you guys know that it's okay. See, this is a 9 period moving average. I like to do, when you're doing long term, I like to do 20 period. Now, notice what's going to happen here. It's going to give you a little bit more leeway here. When you add a 20 period, you keep it at 9, but I typically like to keep it at 20 when you're doing long term. I want you guys to see what's going to happen. Let's go 20 period, and let's say okay and apply. See, it gives you a little bit more room to move, compared to the 9 period. 9 period is extremely tight, extremely tight right here. So you may miss a little bit of upside if you decide on getting out, too early. Go back to the 9 period so you can, give you some relaxation time. So if you're moving down, and the stock moves, down a little bit, you're not panicking. You just say, okay, well, we're going to catch this upside potential, upside when it hits right here, and just ride it on up. Okay? So 20 period, long term, keep an eye on it, go through your portfolio. It's a lot of fun looking at this stuff and back testing and seeing, okay, what could have happened if I would have did, this simple moving average strategy on long term. Another stock that we're gonna take a look at later on, the EV stock. I forget which one it was. Let's see if I can click on this. A stock that's kicking Tesla's butt, actually. I think it's Lens something. Anyway, let's open my spreadsheet here and see what stock I was talking about here. Lucid, LCUD. I normally don't recommend stocks, and I'm not going to right now. But if I were you, I would keep an eye on this particular stock. All right, stock is selling for about $55 right now. This particular stock is kicking Tesla's butt in regards to range, driving distance. Drives about 100 miles more, 100 miles further than the furthest driving Tesla, and let's say this stock here is at $55 a share. The car is about $169,000. They're gonna come out cheap with cheaper versions later on. But if you look at the Tesla, that particular stock is selling for a little over $11.37. What is that? $1 trillion market cap, and so that's what I would consider also keeping an eye on Lucid, because Lucid is coming, man. It is definitely on the radar. So if you guys fill your portfolios with that, I'm not sure if that stock is optional. Oh, it is. Okay, that stock is. I'll definitely guess. Options are pretty expensive, but we'll keep an eye on that. So Lucid, that's the one. It's kind of choppy, but if you guys wanted to get in on it and keep it in your portfolio long term, we can see where that stock came from. The high was 64 back in February 2018. That was the high, and let's see, the low was $9 back on November 23rd, 2020. That was the low, $9.69. All right. High was $64. You look here at this particular area here. It is what was that number? Yeah. So keep an eye on this stock, man, because in my opinion, this is going to be a stock that's going to compete with Tesla. That here is a $21.78 to $21.78 there. So this is a range that I think it could definitely get back up to shortly. Shortly, it closed here on yesterday, which is 55.42, 55.21. So anyway, it's November right now, 2021. So we'll see over the next few years if my projection, my call was right, because it did drop. Look at this big gap, gap down from 61, from 34 all the way down to, 35, which is not a big gap, but coming from 64 all the way down to 35, that's a huge drop. Not sure exactly what happened, but that's the moving average right here, guys. So if you were here riding this thing up, then it gapped down and sold out, this is where you would have got out. Well, I would have got out a long time before that, but you know, if you wanted to get out, you know, you could have got out here, but you know exactly what your out is before you get in. Riding it back out, wait, you know, possibly here, fake move, got in here, rode it up. You know, it's a tight stock. We've been moving sideways for a minute until just recently. All right, guys, go through your portfolio. It's a lot of fun. Go take a look at it. You look at Tesla right here. It's been, you know, dropping. Why do I keep having that? Actually, it hasn't been dropping. TSLA. Yeah, it's been rising over the last few months. Okay. All right, thanks to joining Black Wall Street EDU, guys. Sorry for making this video long, but coming up over the next, you know, few days, I'll add some really cool stuff to get you guys excited about trading again. All right, till next time, stay tuned.